Bitcoin ETF, a new dawn for crypto. The US financial world is buzzing. Could a Bitcoin ETF finally be approved? Recent signals from regulators suggest it's possible. The crypto community has eagerly awaited this moment. A Bitcoin ETF would mean wider adoption and legitimacy. The SEC has been hesitant, citing market manipulation and investor protection. However, SEC Chair Gary Gensler acknowledges the demand for crypto products. The world is watching closely as the SEC moves closer to a decision. Bitcoin's price surge, a glimpse of the future. The news of a potential Bitcoin ETF sent ripples through the market. Bitcoin's price surged to a 6-week high, reaching nearly $97,700. This price jump reflects the market's excitement and the potential influx of capital. While the price has since stabilized around $94,000, the message is clear. A Bitcoin ETF is a big deal. The recent price movement is a taste of what could be in store for Bitcoin. A spot Bitcoin ETF would make it easier for institutional investors to gain exposure to Bitcoin. Pension funds, hedge funds, and asset managers have shown increasing interest in cryptocurrencies. However, regulatory hurdles and custodial concerns have kept many on the sidelines. A Bitcoin ETF would remove these barriers, opening the floodgates for institutional capital. Analysts predict that billions, even trillions of dollars could flow into the Bitcoin market. This surge in demand could propel Bitcoin's price to new all-time highs. Some experts believe a Bitcoin ETF could even spark the next crypto bull run. While the price surge is exciting for investors, it's important to remember that the crypto market is notoriously volatile. Prices can fluctuate wildly in short periods. Investors should proceed with caution and only invest what they can afford to lose. Unlocking institutional capital. The spot Bitcoin ETF promise. A spot Bitcoin ETF would be more than just another investment product. It represents a bridge between traditional finance and the crypto world. Institutional investors have long been wary of dipping their toes into the crypto waters. A spot Bitcoin ETF offers them a familiar and regulated way to gain exposure. What sets a spot Bitcoin ETF apart is its direct connection to the underlying asset Bitcoin itself. Unlike futures-based ETFs, which track Bitcoin futures contracts, a spot ETF would hold actual Bitcoin. This direct ownership provides several advantages for institutional investors. First, it eliminates the complexities and risks associated with futures contracts. Second, it offers a more accurate reflection of Bitcoin's price movements. Third, it simplifies custody and security, as the ETF provider would be responsible for safeguarding the Bitcoin holdings. The potential impact of institutional capital on the crypto market cannot be overstated. Institutional investors operate on a scale that dwarfs individual investors. Their entry into the market could drive up demand, liquidity, and overall market capitalization. This influx of capital could also attract more developers, entrepreneurs, and businesses to the crypto space, fueling innovation and growth. Section 4. Litecoin, XRP, Dogecoin, the altcoin ETF landscape. While Bitcoin grabs the spotlight, other cryptocurrencies are also vying for ETF approval. Litecoin, often referred to as the silver to Bitcoin's gold, is on the verge of a major milestone. The SEC's decision on a spot Litecoin ETF is imminent. Market analysts are optimistic about its chances, with some predicting a 90% probability of approval. XRP, the cryptocurrency associated with Ripple Labs, is also in the running for an ETF. However, its path to approval has been more turbulent due to ongoing legal battles with the SEC. Dogecoin, the meme-inspired cryptocurrency, has also garnered attention from ETF providers. While it may seem like a long shot, the SEC's recent stance on treating Dogecoin as a commodity like Bitcoin and Litecoin could bode well for its ETF prospects. The approval of altcoin ETFs would further validate the growing legitimacy and maturity of the cryptocurrency market. It would also provide investors with more diverse options for gaining exposure to the crypto asset class. As the ETF landscape expands, it's essential for investors to conduct thorough research and understand the risks and potential rewards associated with each cryptocurrency and ETF. Section 5. Riding the crypto wave, institutional demand, and market trends. The crypto market is no longer a fringe movement. Institutional investors are recognizing its potential and actively seeking ways to participate. BlackRock, the world's largest asset manager, has been a notable player in the ETF space. Their iShares Bitcoin Trust has seen a surge in inflows, accumulating nearly $2.5 billion in just 5 trading sessions. This institutional demand is a testament to the growing acceptance of cryptocurrencies as a legitimate asset class. The market outlook for crypto remains cautiously optimistic. While regulatory uncertainty and market volatility persist, the long-term growth potential is undeniable. The crypto market is still in its early stages of development, and early adopters have the opportunity to capitalize on its potential. To stay ahead of the curve, it's crucial to stay informed about crypto news, market trends, and regulatory developments. Subscribe to reputable crypto news sources, follow industry experts, and engage in online communities to stay up to date. The crypto market is constantly evolving, and staying informed is key to navigating its complexities and seizing its opportunities.